Could you tell me what your role is as an investment director?
The aim of the business is to provide investment solutions for private individuals who have capital that they wish to employ to achieve a certain level of return. My role as the investment director is to both design the strategy for the client with the intention of meeting that aim, that return, and also then manage that strategy on an ongoing basis.
What are the main areas that you invest in?
We invest in a number of different areas to try and, as I said earlier, to keep the overall spread of investment right. And they really start from the lowest risk asset, which is cash, and then we introduce other asset classes that have different risk and return profiles. So as one is prepared to take on a bit more risk, then obviously one's going to potentially get some more return. So moving up the scale of risk, we go from cash to fixed interest securities, where in effect the client will be lending their money to either a government or a company in return for a fixed rate of return, with a view that capital will increase over a period of time. We then look at index-linked, i.e. linked to the rate of inflation securities. Equities will be the next level of risk, an equity being a stock or a share, where you're buying a part of a company, and obviously as the companies perform better, so the price of that share should increase. We then look at slightly more esoteric or different areas of investment to give some return that's not linked to equity returns, to share returns. For instance, commercial property is an area where one can achieve a fairly good income return, but you're investing long-term into bricks and mortar, something that you can see, something that's slightly more safe. We also look at commodities, so looking at precious metals, either gold or platinum. We look at agriculture, which has become an interesting area of development over the last 20 years. And then we have the final asset class we call our alternative investments, and they can be either hedge funds, which invest in lots of different areas, or something that's called absolute return funds, where the manager will invest money across a whole wide range of areas with a view to giving small incremental elements of return over a reasonable period. And as I said earlier, we try and combine those asset classes to get the best level of risk and return.
In difficult economic times, what would you suggest are attractive areas for investment?
There are a number of attractive areas, and I think I've touched on one earlier with the bond investments, but perhaps I'll develop that a little bit further. A lot depends really on where we are within that economic cycle. If we are at the very bottom of an economic cycle, then the best form of recovery is probably going to be in companies who are going to recover as the economy recovers. So when prices are very low, you could invest in an equity of a company where you saw they would benefit from that reduction in interest rates that you've seen. If it's in the early stages of an economic depression or recession, shall we call it, then with interest rates likely to be cut aggressively, then obviously the fixed income area of the market is perhaps the most appropriate place to be. Another area which I think has traditionally been a very safe haven has been gold. And I think over the last 15 years or so, gold has been through a number of different cycles. And in particular, I think as a recovery play, it will always be perceived as a store of value. At the same time as the emerging markets keep continuing to grow, there's a lot of interest and appetite for people to invest in gold in terms of their jewellery, as well as wishing to own that asset. So I think gold, fixed income securities, and early cycle equities would be my answer.